Hi everyone, my name is Jorge. Welcome to my channel. I'm doing an investment challenge uh, in 2021. I started in January with $150 and I'll be adding $50 every month all the way till December. My goal is to get to $1,000 before the year ends. So for today, um, my balance is $242.89. I'm up today 25 cents. So out of those $242.89, 200 of those are mine. So I'm up 42.89 for the day. So if we go right here on APXTW, I have 25 shares. I made 25 cents for the day, and it last traded at $4.10. I bought it when it was $3.96. So I'm making $4.12 overall in that stock. On SMPR Plus, I have 24 shares. Pretty much for the day, it just was zero gains or losses. It last traded at 550, and I bought it at 495. So I'm making $13.17. So for APXTW, at this point, I wouldn't recommend anybody getting in. I just don't know how high it's gonna go or how low. I'm hoping that it hits at least $7 from now till mid-March. They're supposed to announce a merger date, and they already took too long. They were supposed to do it at the beginning of February. They were supposed to announce it at the beginning of February, but they haven't. We're mid-February already, and they haven't said anything. So for SNPR Plus, anything close to $5 would be a good entry point. I don't think 550 would be a good entry point right now. It's kind of high. One thing when you trade stocks, you don't want to chase them, because this might go back to like $4 or $4.50, something like that. It may not. It may just take off to $10. But you always want to get them on a pullback when it has a bad day. So for now, I think just wait till it gets closer to $5, maybe 5.15, 5.10, 5.20. But it's your decision. It's your money. So it depends how much you want to wait on it. So I was gonna let you guys know about. I made a video maybe last month. I bought CCIV, and so this is Yahoo Finance. So if you CCIV, it brings you to this one right here, but we're actually trading warrants. So the difference between the shares and the warrants is that when you buy the shares, here we go, see how much they are. They're $56.23. So let's say there's something happened and they were like, well, we're not gonna merge with anybody, and we're just gonna, because they have like a 2-year span. These companies have a 2-year span to find a company they want to merge with. If they don't, then that's it. All the money that was in there gets lost. But anybody that bought the shares, they get $10 per share back. So if somebody bought at $56 right now, and let's say something happened and this doesn't go through, instead of getting $56 a share back, they will get $10 a share back. So I mean, it's really, really rare that happens, but it can happen. I've been, well, lately I've been like in probably a year in, and you never hear anything bad happening. I mean, APXTW, it's not doing anything, and it's about to merge already, so it should be hitting at least $8-10. SMPR barely announced that they found a company, and it's already trading at 550. So I'm hoping this to go to 10. And usually they go to 10. I just don't know why APXCW hasn't. It's a good company. So back to CCIV, right? So I actually bought the warrant, CCIV. but see how here CCIVW, that means warrants. And this is a 35.20 right now. So I got out. So let me get the calculator. So I went in when it was around $7. So I only had $25. So 25 divided by 7 equals 3. I only had 3 shares in there. So let's see. No. So if I had stayed, so with my 3 shares, and I sold about like I think $13.50. So I came out with like $40. But if I had stayed my 3 shares, right now it's at $35 over here. Would be $105. So I would have turned $25 into $105. Well, I have a friend that put $300 in when it was around $7. Well, let me clear it that, sorry. So my friend put about $300 when it was about $7. That got him 42 shares. So 42 times 35. So right now, if he wanted to cash out at this point, he would have 1,470, and he only put 300. So you subtract the 300 that he put in. He has a $1,170 profit. So this is with $300 investment. This is already his profit. I got out. I thought it was gonna just drag like APXTW and stuff like that, but you know, like those are just the choices that you make. There's no only one path to making money. There's a lot. So I mean, that friend just stayed in it and he had more money than I did. I only put $25 because remember my challenge, I only started with 150 and adding $50. So if I had started with just 500, I could probably put more money in that one, and I probably would have made more money in it. So just have that in mind. So also when you're trading, remember that these are SPACs. If you want to go to YouTube and search up like what's a SPAC, and it'll tell you. I've gone over it in a few videos, but I mean it's kind of lengthy. But it's basically just an investment group looking for a company to merge with. So once they merge, the investment group gets out and the company takes over. So this one, CCIV, the rumor is that they're going to merge with Lucid Motors. It's an electric car company. So, you know, like this one, it's already 35. CCIV, that's a warrant. But it's in Roman numerals, right? So now there's already a CCVW. So those are the warrants, right? The CCV is the actual shares. If you see, we'll see how much. So if you wanted to buy CCV, which is the same investment group, but this ones, I don't think they have found a company to merge with. They're still looking. So let's say you wanted to buy this, you could buy it at $12.11. And like I said, let's say something horrible happened, which is very, very unlikely, but it can happen. And let's say you had one share, just to make it simple. Well, if everything went south and the company just didn't find anybody, they have 2 years to find somebody. You will get $10 back, and you would lose $2.11 on that investment. So, but let's say CCV, and actually these are the warrants at this point. See, the warrants are already trading at 377. So let's say you bought one of those, just one warrant. So if, let's say, something horrible happened and they didn't find a company to merge with, and you had one warrant worth 377, you would lose all that money. With warrants, you don't get any money back. That's the risk you take. So basically, if you bought one warrant, that gives you the right to buy one share at 11.50. So the actual CCV, go to CCV. See, like, let's say like when they merge, this one goes to like $50, just like CCIV, right? Well, with the warrants, you have the right to purchase those shares at 11.50, no matter what price. But you don't have to go through with the contract. You can just sell your warrants. Like I said, like right now it's 377, and let's say that somehow they got a good company that people wanted to invest in, like Lucid Motors, but another company, and this one went all the way to 35, just like CCIV. Well, then you can just sell it. So if you bought one at $3.77, and then it went to 35, you could cash out at that point, and you will get $35 back. When you put in 377, you get 35. But that's it. That warrants go all the way to 35. Like I said, you never know. Look at APXCW. I had high hopes when I got in. I got in at 396, and it's barely at 410, so it didn't do anything. SNPR, I actually got in at 306, but I only had 7 shares, and then it took off, and then so I bought more, like at 570, I believe. So that's why I brought my cost per share up. So it's $4.95, and now it's at $5.50. So I'm making $5.17. So look at here, I have 24 shares, right, of SNPR. So let's say I have 24 shares. So let's say it went to like $30. So if I cashed out at that point, I would cash out with $720. When I put in, I believe it was like $50 altogether. So from $50 making $720. So that's what you have to think about when you buy shares. Think about that. So let's say we were able to buy 100 shares, and we bought it at $3, right? So we have 100 shares. So by the time it gets $35 to $35, now you have 3,500. So that's something that you have to think about. Like, if you buy, if you only have money for one share, that's just something so you can learn. But basically, you want to get to 100 shares at least. And then as you build up your money, you're going to buy maybe like 200, 300, 400. So eventually you want to get to 1,000 shares. And then that way you can get a lot more profit. But it's a step by step that you have to go. So and that's one thing. I had a question from a friend too that said, well, if I put $100, can I lose 300? No. So basically right here, we said that we put about $50 in SNPR so far. So if somehow, like I said, something went very bad and they didn't merge with anybody, because even though they already found Volta, it's a charging car company. Even though if the deal fell through, they still have time to go look for another company. So they have 2 years, the SPACs. That's what they're called. So they have 2 years to find a company. So even though it would hurt the stock and probably go down to like $2 if the deal fell through with Volta, but they have more time to find somebody else. So you wouldn't lose your money. So at this point on this, you only lose whatever you put in. So if you put in $50, that's all you can lose, which is, it's very unlikely. That's why you try to buy low so you're not in the red. So basically I follow this YouTuber right here, Chris Sane. He's really good about giving you price points and stuff like that, but sometimes he goes too fast. So that's why I made my channel, just to kind of, so that my family and friends could see how I build up. Because a lot of times what I get is, oh, well, I don't have $1,000. Well, I don't have $5,000 to start investing. Well, I don't have money to invest. But you can always find money. I mean, if you're eating out, if you have the latest cell phone, if you have like the best data plan, cable, you name it, there's always some wiggle room to start investing. And like I said, that's why I'm doing this challenge. I started with $150. I'm putting $50 every month, and I'm gonna hopefully show you how I'm gonna reach $1,000, hopefully before the year end. But like I said, the more money you put in, the more you can make. Again, well, you can lose money as well. You just have to be careful on what you invest. That's why I like this guy right here, Chris Sane. Most of the time he gives you an entry point, just like I'm trying to give you on this ones. Like I said, right now, let's say you went in at 550, and then the people lost interest and it went down to like 480, and it stayed there for like a month. Then people get impatient and they sell. Well, then guess what? It goes right back up. So you just have to be patient, and you have to wait for a good entry point. If it takes off, it takes off. You know, for CCIV. Oh, this is CCIV. Let's see. There you go. For this one, I went in at $7, but I sold around 13, thinking it was gonna have a pullback to like 8, and it didn't. It took off, but I didn't buy it anymore because, you know, like if I had gone in at 25, I could have made profit from $25 to $35. But then it's a really high chance that it can drop. Just like if you want to go buy now, there's a really high chance that it can drop back to 30 or 25, and then you have to wait longer. So you just don't know. So that's why you don't chase. So, but if you have more money than just $150 and you're okay investing it, it's a risk. But like I said, he gives you really good advice. So if you want to follow him as well, and you know, like he gives advice in every video, just go ahead. Just one thing, when you trade with TD Ameritrade, when you buy penny stocks, which is anything about below $5, I believe, you're gonna get charged about $6.95. So you don't get charged on these ones because these are warrants. They're from a SPAC. So remember, the actual value of SMPR, it's about $16 the share of the actual stock. These are just warrants. So that's why I like trading warrants and not the actual stock. Actually, in my main account, I trade the stock because I have more money on that. But for this scenario that I have, just to show my friends and family, I trade warrants. So once I probably reach maybe 500, maybe 700, I'm gonna go ahead and start kind of doing videos following Chris Sane. So like the advice that he gives. For example, he said to get in Curious, and he gave an entry point of $10. So if you see, it's been trading like in January 29th, it was at what, 10.54. Right here about February 8th, it was about 9.93. So you see, like if people buy it right here at 11, and then it might take a pullback, then people get scared and they sell, and that's when you lose money. If you just hold, let's say somebody had bought it right here at 12, and look how low it went, all the way down to like 8.93. People get scared and they sell. Well, guess what? Look, it hit 11, and it most likely is gonna keep going up. So you just have to be patient. And like I said, look, right here, you see like a big jump, it's not a good entry point because guess what? It takes a pullback. See, instead of having bought it at 1098, could have bought it at 1005. So see, right here, another big jump. 1144, 1043. So he has an entry point on this one. Anything close to 10, 1020, 1030, 1040. If you catch it under 10, even better. But it might take off, and you might not reach it. So I was in on this one with him, fuel cell. So I got in around $10. Let me see, it gives me the chart. So let me see. So I went in this one. I think I went right here. This is where I got it. So I got it at 1061, around there. And that's the entry point that he gave. I think he was giving them for a while. He was saying fuel cell, it's a good company. And I didn't get in until it was 1061. But look, it had reached already like $26, $27. And actually it has a pullback to 22, which it could be a good entry point if you were interested in it. But I think Cures might be a better bet if you catch it closer to 10. So that's just one thing that I want to mention. If you have more money and you're willing to put a little more risk, like I said, it's okay if you can put 25 shares, but to really make money trading these stocks right here, you want to have at least 100 shares. So that's why I start with warrants, because look at the prices, they're cheap, and you don't pay that commission fee because they're warrants and not penny stocks. When you try to buy regular penny stocks, you're gonna get charged $6.95 to buy and $6.95 to sell. So that's already like $15, almost $14 that you're gonna get charged for that trade, and it adds up. So just be careful when trading penny stocks. Like I said, it's a good warrants are a good way when you're starting with $100 or something like that. They're higher risk than shares, but look, I'm up on both of them. Even APXCW has been kind of dragging out this time, but I'm still up 412, and on SMPR I'm up 1317. So just if you have any questions, just drop them in the comments. I'll try to answer them. Just don't be scared, just put whatever you're willing to lose in it. That way, like you don't put, if you have $5,000 in savings and you put them in there and you lose half of it, you're going to be upset. No, so just put whatever you're okay risking. With time, you'll get the hang of it, and you'll make better decisions. Because when you start investing, you're going to make mistakes no matter what. No matter who you follow, no matter what, you're going to make mistakes. So it's better to make them with $100, $200 than with 5,000, 10,000. So like I said, I'm not a financial advisor. Please invest at your own risk. Please, if you have any questions, drop them in the comments. Like and subscribe, and thank you for watching. We'll see you next time.